Good afternoon, all traders across the globe. This is Jeff Killian for the Vector Traders Consortium. Today is 10/21/2021, near market close, 3:30 p.m. Eastern Standard Time. And in today's short video, hopefully no longer than 3 minutes, hang with us. I want to cover the charts that I have within my personal workspace and how they have them set up and how basically I view the relative comparison of the indicators and the subgraphs below as compared to the prices based on where the market is trading today and now. There are many techniques that a trader can use, and the focus is always, where should we begin? Where should we begin? And from a professional standpoint, we need to begin with the volume as compared to the prices. The volume in the subgraph below, only one subgraph of an indicator is compared to the prices and the levels that the prices have been trading in the most recent past. So mark to the market, the E-mini futures are trading at 45.3675 right now. Okay, the all-time high price here based on an open from back here, not the high, is 45.36 flat. The midpoint, almost a 50% retracement to the downside, is 44.29. And down here at the bottom of the wider channel, 42.91.25. Market starts to sell off here because there's no more volume here, a couple short days to support it. And volume comes in here to drive the prices down. Here at this point, the shakeout to the downside, stabilization volume, the prices trade up. But with the increasingly decreasing volume as seen by the histogram numbers on an end-of-day volume basis, it's clear that the prices are trading up on inflated highs. We do not have significant smart money, the largest institutional players, the largest 10 families throughout the world who actually control the markets, right, to be able to power the prices through here. So we are up against superior resistance with very little end-of-day substantial volume to power through at this point. The next indicator I'm looking at right away is the money flow index, which is going to give us a very good idea of what these largest institutions are doing as compared to the prices. Now, it's obviously that short-term money is continuing to tick up for the last 5 sessions, which is good because there is some strength behind this move. But as you've seen by the volume numbers, that's a little subject to interpretation by a lot of traders, but on this end, it's completely objective, nothing subjective. Next, I'm looking at the longer-term money perspective as laid out by the Shaken money flow. And here, we have an entirely different message that this indicator is sending us as compared to what we just saw. In fact, apart from making the relative comparison of this indicator's peak as compared to this price point, and then almost a complete double top here based on the action right now. Look at the indicator's value at this point. So essentially, we are here at a double top right here, right now, or very close to it. And the indicator, again, is giving us an entirely different story. Now, if the market closes and this downtick sticks, we will have an official, I believe, close to an official negative divergence, technically speaking. So the longer-term money, again, is telling us an entirely different story as compared to what is the real strength behind the mechanics of the up move. Next, I'm looking at CO right here, the Shaken Oscillator. And this is an accumulation distribution computation that's pegged to the MACD, the slowest indicator within everything that I am using on a daily basis, but up with an additional confirmation. But again, look, traders, close to the overbought internal zone. Next, I'm looking at the Stochastics Momentum Index. We're in overbought territory. If we get a down tick out of this, we'll have another negative divergence. It depends on how the market closes today, right? Looking to get the turnaround and cross from above to below the overbought zone, and then again the signal line here in red if prices are going to turn back around because of the lack of volume to support the continued move of prices to the upside. After that, again, our slowest indicator the MACD right out of the box. The disparity is wide. This trend following indicator to confirm that the uptrend is increasing in strength based on the price movement itself. Disparity is wide. But again, if we get a downtick out of this, we'll have another negative divergence. So there is a strong possibility we could have multiple divergences, negative divergences in multiple time frames to confirm that the market should turn back around. The only way that this market is going to continue to trade to the upside is if we have a lot of movement on the volume numbers coming in on an end of day basis, larger institutions stamping out the statement, I want to say that that's it. We're going to continue to move to the upside, or that volume is going to be a strong sell, and the market should turn back around sharply. Other than that, what are we missing? Let's take a look at the Fib application real quick here before we go. And you can see how I have my point of origin here, my connect point here with the all-time open of the down close here, and there we are right at that point. Now, if the market turns back around, here's target number 1, 2, and 3, which are related to these levels here, here, and here for close to a perfect match. We'll throw a 50 in here as well. I think a notable mention should be and will be, why do I have a black background? Why do I have the green charts? And why don't I have red bars for the down closes? Good questions. One, the black background versus the green initially allows a trader to look at this screen for 12 to 15 hours a day without your eyes ever getting tired. Simple, logical, and it works. Number two, why is the down closes of, or why are the down closes of the volume bars here in green instead of red? Because a lot of times volume will come in here to act as breaks volume. And if you're going to trade short again and you don't understand the breaks volume has come in here, okay, you're going to get stopped out left and right. So this is exactly procedurally why, protocol wise, why we do it this way. And these are just some of the techniques, some of the very most basic techniques that a professional needs to understand and implement on a daily basis. Are there many more? Yes, a mountain more. And where that leads to is the S&P E-mini Expert Market Timing course. All our techniques and strategies are covered within it at a very affordable price that almost anyone can get into and learn a mountain of information in a short period of time within 8 modules. I did a complete walkthrough of the February 2020 sell-off on the market and exactly how you could have capitalized on that. As I mentioned yesterday in another video, if you had the right information, had been trained on how to identify with that type of sell-off. Whether you trade stocks, futures, ETFs, anything that's related to the general markets and has a high correlation level, this is where it all begins. It's all about supply and demand, who's in control, and when and where do we have any real business risking real money. We went a little bit over, but for those of you who had stayed, it was worth the ride, I know. Jeff Killian for the Vector Traders Consortium. Be careful out there across the globe today and every day, because at the end of the day, the key to longevity in trading is risk mitigation.